Hello, welcome you all for the 4th class of 10th week. In this class, we are going to solve some of the illustrations in relation to input tax credit and also discussing on input service distributor under goods and services tax purview. Let us start with some illustrations. Illustration number 6, Akshay Incorporation supplied goods in India for rupees 8 lakh and exported to US rupees 3,50,000 at the GST rate of 12%. The company have the inward supply worth rupees 10 lakh and the GST paid on the same is at 10%. Determine the net output tax liability under GST. Solution: determination of net output tax liability of Akshay Incorporation. Particulars CGST SGST. First consider output tax on outward supply. First consider output tax on outward supply in India. Output tax on outward supply in India at the rate of 12% on rupees 8 lakh, that will comes rupees 96,000, and for CGST it will comes rupees 48,000, for SGST also it will comes rupees 48,000. From this output tax on outward supply, deduct inward supply tax, that is tax paid on inputs at the rate of 10% on rupees 10 lakh, that will comes to rupees 1 lakh, that can be apportioned among CGST and SGST at rupees 50,000 each. 50,000. This should be put in bracket because it is already paid from the input. So, the net GST liability of Akshay Limited is nil, because here input tax is more than output tax. This here input tax is more than output tax. The excess input tax credit of rupees 2,000 can be utilized for the next period. The excess input tax credit, that is rupees 2,000 each, can be forwarded. Excess input tax credit of rupees 2,000 each can be carry forwarded for next year, or it can be claimed as refund. Notes to the solution. Note number 1, no GST is levied on exports as it is zero rated supply. Note number 2, the excess of electronic credit ledger balance can be claimed as a refund, or that can be carry forwarded for the subsequent period. Illustration number 7, the information given below is related to Z Limited. Number 1, being a manufacturer, acquired the goods from the dealer who is situated within the state of Telangana for rupees 27,000 with GST of 12% for producing two type of goods, that is taxable and exempt goods. Number 2, the company involved in producing both taxable and exempt goods under GST. The details of supply of these products are: number 1, supply of taxable goods rupees 20,000 plus GST of 10%. Number 2, supply of exempt goods rupees 15,000. You are required to determine the net output tax liability under GST. Solution: determination of net output tax liability under GST. In this case, with one inward supply, the company producing both taxable and exempt supply of goods, but for claiming input tax credit, only 50% of the input tax can be used and the remaining input tax should be reversed in electronic credit ledger as it relates to exempt goods. Illustration number 9. Following are the information related to the supply made by XYZ Limited. Number 1, interstate outward supply of goods rupees 1,38,000 at 18% IGST. Number 2, intrastate inward supply of goods rupees 1,12,000 at the rate of 12% GST, both including CGST plus SGST. You are required to determine the net output tax liability. Solution: determination of net output tax liability of XYZ Limited. Determination of net output tax liability of XYZ Limited. Determination of output tax liability of XYZ Limited. Here both IGST, CGST, SGST. Particulars. First, consider IGST paid on interstate supply. IGST on interstate supply at 18% on rupees 1,38,000. That is the value of inward supply. So IGST will be 24,840 rupees. From this, deduct input tax paid. Input tax paid on inward supply. On interstate supply 13,440. For CGST it is 6,720. For SGST it is 6,720. Now deduct input tax from output tax, that will be rupees 11,400. So net output tax liability is 11,400. Notes to the solution: it is noted that from the input tax credit balance of IGST, we can use for paying output tax of both CGST and SGST. Let us discuss on input service distributor. It is also called as ISD. Section 2 subsection 61 defines the term input service distributor as an office of the supplier of goods or services or both, which receives tax invoices issued under section 31 towards the receipt of input services and issues a prescribed document for the purpose of distributing the credit of CGST, SGST, IGST or UTGST paid on the said services to a supplier of taxable goods or services or both having the same permanent account number as that of the said office. The essential conditions for qualifying as input service distributor. The important conditions to be fulfilled for qualifying as ISD are: number 1, the input service distributor should be an office of the supplier. Number 2, such supplier can be a supplier of goods or services or both. Number 3, such office should receive tax invoices issued in respect of receipt of input service. Tax invoices received in respect of input goods are not eligible for ISD benefits. Number 4, such office should issue a prescribed document for the purposes of distributing credits of CGST, SGST, IGST or UTGST to a supplier of taxable goods or services or both having same permanent account number as that of the said office. Special features of input service distributor. The important features of input service distributor are: number 1, input service distributor is needed to register under GST as a deemed supplier. Number 2, for input service distributors, threshold limit of turnover is not applicable. Number 3, the existing ISDs under service tax rules are also freshly registered as ISD under GST regime. Number 4, every input service distributor is needed to file a monthly return by 13th of the next month. Manner of distribution of ITC by ISD under section 20 of CGST Act 2017. Input service distributor should distribute the input tax credit in the following manner. Number 1, the input service distributor shall distribute the credit of central tax as central tax, or integrated tax and integrated tax as integrated tax or central tax, by way of issue of a document containing the amount of input tax credit being distributed in such a manner as may be prescribed. Conditions for distributing the credit by ISD. The conditions which are to be fulfilled while distributing the credit by ISD are: number 1, the credit can be distributed to the recipient of credit against a document containing such details as may be prescribed by the Act. Number 2, the amount of the credit distributed shall not exceed the amount of credit available for distribution. Number 3, the credit of tax paid on input services are distributable to a recipient of credit shall be distributed to such recipient only. Number 4, the credit of tax paid on input services attributable to more than one recipient of credit shall be distributed amongst such recipients to whom the input service is attributable, and such distribution shall be pro rata on the basis of the turnover in a state or in a union territory of such recipient during the relevant period, to the aggregate of the turnover of all such recipients to whom such input service is attributable and which are operational in the current year during the said relevant period. Number 5, the credit of tax paid on input services attributable to all recipients of credit shall be distributed amongst such recipients, and such distribution shall be on pro rata basis in relation to the turnover in a state or in a union territory of such recipient during the relevant period to the aggregate of the turnover of all the recipients and which are operational in the current year during the said relevant period. This ends the discussions of 4th class of the 10th week. In the next class, we are going to focus on discussion questions for assignment and quiz. Thank you.